Hello and Happy New Year. I'm your host, Tshepo Modiba, and this is Buy Africa, where we focus on investment opportunities across the continent. As the year grinds into gear, I'm joined by Langa Madonko from Africa's Strategic Impact Fund to look at the year ahead. Langa, 2015, it should be a fascinating year for investors. Lots of interesting themes to play out. Some of them drawing out from 2015. I would think the big one certainly the big one on my mind is the oil price. How do you see that panning out in terms of who gets impacted in what way?
Well, Happy New Year, Tshepo.
Happy New Year.
I think this is going to be an exciting year. And as you said and alluded to before, some of the activities from last year laid a platform for what we are anticipating to see happening on the continent this year. We still expect Africa to continue being called the continent on the rise. Yeah. Specifically relating to the oil prices, countries like Nigeria, Ghana, who are oil producers, countries like Kenya, Uganda, and Tanzania, where they had recently discovered
Mozambique, another one in that list.
It then brings you to think maybe the rate at which we're anticipating things to pick up might be a little bit tapered because their income is definitely set to come down. But for countries like our own South Africa and some of the non-oil producing countries, we are excited. Petrol prices are going down, food prices are following, so the consumer is happy. Yeah.
So it's not necessarily a good thing, not necessarily a bad thing. It depends on which segment or which countries you're looking at.
Yeah, it depends on where you are sitting. I mean, even for Nigeria, it's, as an example, it's not totally a bad thing. This gives them an opportunity to then focus on other sectors that were really starting to take shape and to get a foothold in the door. An example is the lowering of oil prices in Nigeria is a good thing if you are someone who's in agriculture and some of your implements and imports come from the oil and gas space, like your fertilizers, your fuel for your tractors and equipment. So you are really excited also about the potential of getting greater returns and rewards with a lower oil price.
And I guess given that there are actually very few oil producers listed, it means from a listed business's perspective actually should be a good thing, a lower oil price, because a lot of them actually oil is an input.
Yeah, I mean, it's a good thing. Your overheads are coming down significantly with the oil price going down. In my own personal perspective, I think the price of oil has not reached the floor. I see it going down a little bit further.
Those are brave predictions. Brave predictions.
I think it's not really scary for the oil producers. I think they'll be okay. They won't do as good as they've done in the past, but they'll be okay. Yeah.
Okay. Moving on to some of the other themes that you see panning out. I know financial services is lots of financial services businesses listed in the continent. What are the big themes that we're looking at there?
I think as we continue to look into the continent, we are going to see a lot of activity. For example, there's capital requirements for banks in Nigeria. We want to see how that plays out with the big banks and what that does to the small banks as they all have to go to the market to fundraise.
So just to clarify, it means the banks have to have a little bit more capital on board to be more secure.
That's right. So obviously some of the banks started going to market last year, and I think the deadline for them to meet these new capital requirements will be in March. Similar situation plays itself out in Ghana, where there's capital adequacy requirements that they also have to meet, and they are also going to market. That then presents an opportunity for someone who's looking to buy into some of the fast-growing, high-achieving banks in that particular region of the world.
I mean, increased capital requirements typically means lower return on equity profile because, you know, you're looking at a heavier base and fewer opportunities. Will that have an impact in terms of the economies broader than just banking, potentially?
I think at this point, because of the situation where African banking has been, the impact might not be so grave. Yeah. I think the fact that you are then able, from that heavier base, to leverage that capital and expand your business into an underbanked Africa gives you an opportunity to offset that. I see a situation whereby there may be a little bit of strain that is taken in the first year, but going forward, this is something that should actually give extra strength to the banking sector on the continent.
So actually a reason to potentially get even more excited about the banking sector.
It is, it is. I mean, if you had looked previously at the valuations and the market caps of the listed banks, you'd have seen that comparative to international banks, we were not quite there. This is pushing us in the right direction in most of those entities on the continent.
Okay. Exciting times ahead for finance. I know this is your big industry, so that it'll be interesting to see how that pans out for the rest of the year. Other themes that we should be looking at for 2015? This is the show that we like to say, what should investors be focusing on?
I think, like I alluded to earlier, agriculture is something that's becoming big in the continent. With the oil price lowering, some of these economies, like for example, your Nigeria, in many circles, they've already started calling agriculture and agro-processing the next oil.
Right.
You start to find that in countries like Uganda, there's a city called Maraba, which is now gearing itself for further exploitation of its agro-processing potential. And then you start to find that with the growth of that sector and the growth of the middle class in Africa, there's a huge opportunity in terms of the food and FMCG space on the continent. Also, your big players on the continent in the FMCG space, like ShopRite, are making further inroads onto the continent. So there's opportunities in their supply chain for agro-processed goods.
Tommy, is weakening currencies further entrenching this need to internalize agriculture and produce domestically?
I think it is playing a significant role in that space, but it was always going to be a situation where at some point Africa was going to realize its agro-processing capacity, because as you know, 60% of the arable land in the world is here in Africa. And the shift away from oil in the oil-producing countries, a logical direction is to go that way. In countries like our own, we will also have to see a shift in that particular direction, because it becomes the sensible thing to do economically.
Then moving away and going to specifically currencies, a big international theme is the strengthening dollar. What sort of impact could that have on the rest of the continent, monetary policy-wise, and what sort of impact will that have for investors?
I think the guys in the resources space right now are happy, particularly the ones who are African-based, who then change and use local currency locally. They're excited with the gain in the dollar. Manufacturing, I think there's mixed feelings in that space, because some of your inputs and some of your machinery are stuff that you're importing, so you're getting the dollar at a higher rate. We will still look to see how that will affect indices that relate to manufacturing as we go throughout the year. In spaces such as pharmaceuticals, it's a mixed bag there as well, because you've got local production, but you've got the import side of some of the drugs that were used on the continent. Right. And at the end of the day, it's a good thing for America. I don't know about the rest of the world.
And then I guess one of the topical points will be politics. We always talk, I think the last couple of years have been, from a global perspective, quite interesting from a political basis. We know there's elections coming up in Nigeria. You know, what's the likely, I guess, concern for investors going forward?
I think relating to the African continent, political risk is something that external investors take a lot of time to look at. For example, Nigeria and Boko Haram, everybody's looking to see how heavy a hand Mr. Goodluck Jonathan will come down with to resolve this issue. In as much as Ebola in West Africa is a health issue, everybody's looking for a political reaction. Right. There's several countries who in fact, most of Africa between last year, this year, and next year will be going through the election phase. So we are looking to see how those changes pan out. We wish Mr. Goodluck good luck. And we also want to see what happens in Zambia, who are having their elections right now in January.
As a continent, have we gotten to that point where, or are we getting to that point where elections aren't necessarily seen as something to be afraid of as investors? Have we reached that, or are we reaching that maturity level?
I think slowly Africa is becoming a continent of two parts. You get countries like South Africa, Botswana, Ghana, where you are almost certain that the outcome will be a democratic one. And then there's certain economies and countries that are continuing to try and find themselves in terms of political stability. It's a process that, in my mind, if we give it another 10, 15 years, Africa should come right in terms of the political systems, particularly if we get the AU working right on the African continent.
Okay, so we still need to pay careful attention right now to the political outcomes from elections coming up. Yeah,
it's a very key theme that we need to look at. For example, I'll give Ghana as an example. I think their elections are next year. Word on the street is there might be a change from the ruling party. I'm not going to speculate on that. But if it does change, it means that the current leading opposition is a conservative party. So in terms of the aggression, in terms of some of the projects that have been running, we might see a tapering or a refocusing on other projects. And we also look to see what's going to come out of the constitutional reform in Tanzania and how they're going to manage the process of legislating their newfound treasure, the oil and gas that they've discovered.
And I guess to wrap up, the final thought is, are we still excited about the continent and opportunities for economic growth and spilling from that investment opportunities?
I think because of the backlog that we have in most of the spaces, name it, infrastructure, telecoms, power, there's still a lot of room to grow a business in Africa across the entire space. Even in the space of mineral resources and the amount of exploitation or extraction that has occurred, we are still minimal in terms of reaching the full potential in most of those sectors. I think Africa is a continent that remains on the rise and will become a very significant player and will push to be a leading entity in that play for a long time to come.
So in short, we must buy Africa, right?
Buy Africa.
There you go. Thank you, Langa. Thanks to my guest, Langa Madonko from Africa Strategic Impact Fund. As he said, we need to buy Africa. And on that beautiful note, that's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo, and send us your thoughts about the show.